Hey there, I've got a gift for you today called the Forex Profit Ribbon. This is a free trading system that I'd like to give to you. This is a working system. This one works really nicely. I think you're going to like this one a lot. Now below, you're going to find a comments section. It's really important that you give me some feedback on this because I really do like to hear what you have to say. And it's the great way for us to keep in touch. Before we even get into any kind of members area, anything like this, we can start to communicate a little bit in that comment section that you see below the video. Now, with the profit ribbon system, we're going to start looking at something that I've dubbed Forex or market equilibrium. We're looking at the Forex market through the eyes of a sense of balance. Now, the market has this sense of balance to it. It has a sense of equilibrium. And I want to demonstrate that, first of all, with this. It's a little toy boat. And I'm going to show you that on the Forex profit ribbon charts as well. Now, equilibrium is kind of like this edge on a boat. We have a keel. And the keel on a boat keeps it fairly straight up and down in the water. When you've got a keel, a well-balanced boat is going to want to stay up and down in the water. It is not going to move side to side too much. Now, when you have a boat with a good keel on it, well-balanced boat, you can go from side to side, but the boat is going to want to right itself. So you have this equilibrium that is built into the boat in the sense of the keel. So you've got it wanting to move to the side, but it's going to pop right back up again. You can push it over to the side and it's going to pop right back up. And that is equilibrium as far as a boat goes. Now, what I'd like to do is switch over really quick to the Forex profit ribbon chart and show you essentially how equilibrium works there. So what we're looking at right now is the Forex profit ribbon on a chart. Now, this ribbon is what's running through the price itself. This is the yellow and red band that we have that runs right through the middle of this price. And this is Forex equilibrium. This is the market's equilibrium. We have a sense of balance here. And you're going to notice that as the market moves, the equilibrium is going to follow it up and down. It's going to chase the market to some degree. The market is constantly moving and its sense of balance, the market sense of balance, will move with the market. Now, this ribbon will follow along and let us know essentially where that sense of balance is. What we can do is anywhere you look on the chart, you can scroll back in history as far as you want. What you'll see is the market gets to this sense of balance and then it will take off. This is like the boat leaning over and then it comes right back again, right back to its sense of balance, moves away and it comes right back, moves away, comes right back. And this will do this over and over and over again. So it will move away from balance, from equilibrium, and pop right back to it. It is not going to go too far away before it needs to return to its sense of balance, to its market equilibrium. All right. Now, this is a concept that I'm going to be talking about over the next few days, this market equilibrium. So this is really the first taste of this. With the Forex profit ribbon, we have a really clear idea where that market equilibrium is. All right. Now, with that being said, I want to introduce you to the Forex profit ribbon, and I'm going to show you exactly how it works and how you trade this. Now, this is what you're looking at. You're looking at the profit ribbon system in its entirety on the chart, and it's comprised essentially of two main indicators. We've got the ribbon itself that runs through the price, and we have this CCI with a signal line that is below. And together, they form a really effective trading system. I think you're going to like this one a lot. I'm not going to waste a lot of your time in this webinar today. I want to make sure that I get all the points across and have you trading right away. I don't want you to spend too much time here. So let's get started. I'm going to introduce you to the different indicators, and then right away, we're going to start getting into some signals. Now, the profit ribbon is what's running through the middle here. This is a series of 7 moving averages. Each are shifted by 1. And this gives us this ribbon formation. Its width is critical to really nice trading signals. This ribbon is really an important part of this. The next thing is we have filters and additional signals with the indicator that's underneath. Again, this is a CCI with a signal line. So we have 2 ways that we're going to use this. I'm going to show you both ways. So first, let's get right into this. The raw signal is going to come from the ribbon. We're going to look at the very basic raw signal. Now, what happens as far as a long trade goes is we get a close above the ribbon. The ribbon, the price will be below the ribbon. And then when we get a move above and a close above, then we get a signal to go long. We get a signal to go short when we get a close below the ribbon. All right, it's really as simple as that. We get a close above, we get a signal to go long. Get a close below, we get a signal to go short. Close above, signal to go long. Close below, signal to go short. And that is very, very simple. Now, we've got more to it than this. We have a bias. So we're going to take a look at the CCI underneath. It's composed of 2 parts, a histogram and the green signal line. Now, the histogram, when it's bullish, is blue, and when it's bearish, is red. So when we're looking at this histogram, we are looking at it from a standpoint of bias. What is the direction that we want to be trading in? So if the histogram is blue, we're looking at trading long. Now we're looking at buy trades only. When the histogram is red, we're looking at sell trades only. Now we can take a trade when the histogram changes color. So let's take a look at this. Well, we'll start with this one here. It's this red. So we take our line, going to put it on the chart, just mark it off. Let's thicken that up a little bit. So we have a sell trade when we have both the close below the ribbon and the CCI histogram turns red. And that's really straightforward. That's about as simple as that gets. Now, the next one is, let's take a look at a buy trade. We'll mark off a buy trade. Now here, I have an area where the histogram, just move this out of the way. Let's zoom in a little bit. Where the histogram, this is difficult to see. There's a little blue histogram right here. Now, we want both components to come together. We want the histogram to turn blue, but we also want to close above the ribbon. All right. And when I mark this off here, we do not get the close above. We get the blue histogram, but not the close above. And then over here, so you can see right here, we have another blue histogram. Now, they're not usually as small as this, but this is a good example. We've got a blue histogram, and we do have a close above the ribbon. And that is a signal to go long. And when we take a look at these, when we get a signal to go long, the market can really go for a long way. When we get a signal to go short, the market can go for a long way. We have an ultimate overall bias when we're looking at the histogram. So we want the histogram and we want the closes in regards to the ribbon to be in order. So we have a red histogram bar after blue. We get a red histogram bar. We get a sell trade. We get a blue histogram bar after red. So the blue histogram bar, we get a buy trade. Blue histogram bar and the close above the ribbon. We're looking to go long. Close below the ribbon, red histogram bar. We're looking to go short. I'm going to mark up my chart. This is where we're going to enter the close of that candle, be the open of the next. And the way I like to do this is I'll put my stop loss above the ribbon as far as a short trade goes. Now there's some wiggle room with this, and I'll explain in a minute, but there we go. My stop loss will go above the ribbon. And to be safe, I'm just going to color this so that it matches our terminal, our MetaTrader charts. So to be safe, I like to go for 1-to-1. Now, when we have a change of the histogram like this, we can go for 2 to 1. We can go for 3 to 1. We can go for quite big trades, because when we see that they do change the histogram, we really are looking at a market change in direction. When that histogram changes color, the market can go for a bit of a ride. It can go for 2 to 1 or 3 to 1. So to be safe though, I like to go for 1 to 1. I'm not going to be too greedy. I just want to get my fair share. So the entry is placed. My stop loss is going to go above the ribbon if the ribbon is not flat. I'm going to show you an example of that. Here, I'm looking at a long trade. So let's mark that off. I'm going to put my green buy when the market closes above the ribbon. And because I'm looking at a flat ribbon here, I don't want to put my stop loss on the ribbon itself. I'm going to zoom in again. Simply because everything's too close together. This gives me very little room for the stop loss. So we're looking at 1 pip. And that is not enough room for your stop loss. So when I have a flat ribbon, when the ribbon is flat like this, it tells me that the market is starting to go sideways. It could be printing very small candles. Whatever the reason, it is showing me there's not a lot of momentum just now. So I am going to use the swing in the market. I'm going to use the swing low for my stop loss simply because it provides a safer place, a little bit better area for me to place my stop loss, because I do not want to get stopped out prematurely. And again, we're going to go for 1 to 1. Very safe target, and you're going to find that this target gets reached a lot. Like, this is really a nice, safe trade. This is the ribbon trade. We are looking at the ribbon itself and the colored histogram part of the CCI indicator. Now, because the market does tend to move, when the colored part of the histogram turns blue, it tends to want to stay blue. Like, the market is going to want to move in that direction. So it's going to stay blue for a while. When we miss this entry, and say we miss this, we're not finished. I mean, we're not done yet. We still have other trades that we can take. And before I get to that, I want to just quickly show you how this filters, how this is used as a nice filter mechanism. When this histogram is blue, we're only looking for long trades. So when we get a signal to go short, like this would be a signal to go short based solely on the ribbon. We have a candle that moves low and it drops and closes below the ribbon. If we're looking purely at the ribbon itself, this could be an indication to go short. But the histogram stays blue throughout this process. So it is filtering out this trade. This histogram on this indicator is a really good filter tool. And we get another example of that here. When the market closes below the ribbon, we could potentially start looking for a short trade. The market is below the ribbon, but this histogram has remained blue throughout this entire process, telling us that the short trade may not be such a good idea. And as you see, we would have probably lost this trade. In both instances, if we had traded the ribbon only without the filter of the histogram, we would have had 2 losing trades. Let's take a look at an example of a filter for long, or the lack of long trades, a short filter. We don't have to move too far in order to find one. So we have an area in here. The market moves above the ribbon, but the filter itself stays red. I mean, this histogram stays red throughout this phase here. And if we had taken a trade to the long side in here, we would have been unsuccessful. We would not have been able to profit on this trade. We would have gotten in here and the market maybe went a couple pips in our favor, but immediately turned around and would have taken us out. Another example of that is right here. Market moved in, against us. It moved up. It moved bullish. We got to close above the ribbon, and immediately it fell back down again. And the histogram filtered that out. So we are going to trade in the direction of the histogram. Now, if I mark this off, I love how this works. We have this candle closes above, this candle closes above, this candle closes above, but the only signal given was on the candle that happened when the market decided to move. So we had this nice candle close above, but there was no signal. And what happened? The market reversed. Again, we had this close above the ribbon, but there was no signal. And again, the market reversed. Third time, we had a close above the ribbon, but we did get a signal. And not just a signal, we had a pretty nice little blue bar here. And the market took off. It exploded. It really went a nice distance. Open the trade on the close of that candle. Underneath the ribbon goes my stop loss if the ribbon's not flat. And then I'm looking for 1-to-1. And we can see, how far did this go? We had a stop of, say, 99, and this went 714. So not quite 10-to-1, but holy cow, did it go. It went really far. So this was a nice opportunity to get a 2-to-1 or a 3-to-1 trade based off of the histogram. Now, like I promised, let's take a look at the signal line. If you miss the change of color, if the histogram changes color and you miss that trade, fear not, we have other entries that we can take, signal line entries. And these are really nice entries as well. So we're going to take a look at, let's take a look at some longs. And we'll take a look at some shorts. All right, so the way this works is once we've got the directional bias, once this histogram is showing us blue, so we're looking at only long trades at this point. So we're looking at the blue histogram. What I want to look to next is the signal line. And that's this green line that runs through the histogram. So we've got this signal line. Now, I'm going to mention something called the zero level, or the zero line. And that's this flat edge. The histogram comes out of the zero level. When it comes out above it, it's blue. It's bullish. When it comes out above it, it is bullish. When it comes out from below, it is bearish. So we have this red histogram dropping from the zero level and this blue histogram rising from the zero level. All right, with that being said, we understand what the zero level is now. In order to get a signal using the signal line, what we want is, first of all, what color is the histogram? It is blue. Now, it's got to have to remain blue throughout this process because we are in a trend and we're looking for a trend following kind of trade. So we have this blue histogram. The signal line, it's important that it drops below this zero level into the black space underneath. That is the setup that we're looking for. This is the approach to potentially a trade. The signal itself is when that signal line moves back above the zero line. If I zoom in, and we'll take a look at this. So I'll mark this section here. Now, if we can see that on the previous candle, the signal line is still underneath the zero line. On this next candle, the signal line moves above the zero line. We have both requirements met at this point. We got the signal line moving above the zero line with a blue histogram, and the price closes above the ribbon. This is a buy trade. We're going to mark off our entry. We're going to mark off our stop loss. And we're going to mark off our 1-to-1 take profit. There was a little bit of a wiggle in here. No worries. We ended up getting hit. Our take profit got hit and the market exploded out of this. All right, so that is trade number one. Let's take a look at another one. Now, you're going to find that this signal happens frequently. This happens all the time. All right, so the market moves up and then it moves below the ribbon. Now, it's not a sell trade because the histogram remains blue. And what we're looking for is the signal line to get below the zero line, which it does. In this area, it is below this entire area this whole time. So from here to about here, it stays below this zero line. And finally, it moves above here. This one is just below. So I'm going to zoom in again. So if I go on the previous candle, yeah, it's just below the zero line. So this is not a trade. It couldn't be a trade anyways because the candle is still below the ribbon. The very next candle, we see that the candle closes above the ribbon and the signal line is above the zero line with the blue histogram. So we have that trend following signal. And the market moves. It moves really nicely. So I'll mark this off. We have our entry at the candle close, our stop loss under the ribbon, and our 1-to-1 take profit. That one was a beautiful trade. This was a trend following trade. And we have yet another one. We've got an opportunity here. The signal line drops below the zero line. And then on this candle here, it pops back up. Not on this one, but on this one. All right. Now what happens is the price never did get below the ribbon, and that's okay. It doesn't need to do that. It doesn't have to get below. It just at the time of the signal is the candle above the ribbon. Yes, it closes above the ribbon. So this becomes our entry. Now we can place our entry, place our stop loss below the ribbon. And then again, we'll go for a 1-to-1. And this one is met very nicely. We get that with no trouble. 2 candles later, our take profit is hit. Now you can go for more. You can go for 2-to-1. 2-to-1 is a nice profit target. I like to play it safe these days, but it's all good. If you want to go for 2-to-1, you are more than welcome to do so. I want you to experiment with this a little bit and just see what the potential is. When the market gives you a signal, how far can it go? Are the signals good? Are they something that could last? If so, I mean, experiment with 2-to-1, maybe 3-to-1. So our next one is going to be a short trade. We're going to be looking at a shorting opportunity, and we get one in this area here. So we've got a red histogram, starts here, red histogram, price is underneath the ribbon. Everything is looking very bearish. We're looking good. We missed the original signal. Or maybe we did get it. We took the original signal, made some money in the move down, and now we're looking for another trade. We could be looking for a long trade as the price closes above the ribbon and we have a blue histogram. That would be cool. But before that trade happens, we get another opportunity to go short. We have the signal line close above the zero line, because what we're looking for is it to move on the opposite side of the histogram and then back in line with the histogram. So we have, zoom in here, we've got this red histogram. So everything is bearish. In this area right here, the signal line pops up above the zero line. All right, so we've got that setup. It looks good. We're looking for a potential short because that setup is going to come along. And then what we need is for that signal line to close below that zero level. And let's mark that off. So not this candle here, but the very next one. You can see it drops below. Once that candle closes, that line is going to print. As this candle prints, it's going to move up and down and up and down. You're going to find that that line wiggles around because it has to adjust itself with that candle as it forms. Once that candle closes, that line is going to be locked in place, and it's locked in place underneath the zero level, telling us that there is some continuation in that trend. And this is a short trade. Entry on the close of that candle, stop loss above the ribbon of that signal candle. There we go. And then we're going for a 1-to-1. And that is very easily hit as well. So we have one short trade, extra short trade in this area. We've got a signal line trade. We have a ribbon trade here as we get the short. We have a signal line trade in here as we get the short. Let's get rid of that. Let's take a look at a couple of other examples. Maybe we'll look at a different currency pair even. This is the Euro USD, or maybe we'll look at a different time frame. How about 4 hours? This is going to work wherever we look. We have this really nice stretch where the market is moving up. Really nice stretch, the market's moving down. So we have some signals here to go short. We've got a couple of extra signals to go long. So let's take a look at those. Now, this is recent. This is what's happened just very recently. So first of all, the histogram turns blue and we get a close above the ribbon. This is a nice long trade. We enter at the close of that candle. Stop loss goes below the ribbon. We go for 1-to-1. And again, you could go for more. You could go for 2-to-1 if you like. Now, we took that trade. We won that trade. Next one we're looking for is a setup to go long. The histogram remains blue, but the signal line drops below and it's now negative. We want it to come back positive. So let's zoom in. We want to find out exactly where that happens. Right here, the signal line comes back above that zero line. This little candle is the signal to go long. Once that candle closes, we can take a long trade. Now, for me, this area of the ribbon is very flat. I don't know if I'd want to use that as my stop loss, simply because of the flatness of it and the closeness of that close to the underside of that ribbon. So what I'll use is the most recent swing low. And you could use maybe that one candle itself or just down here. So we've got our entry, our stop loss, and our 1-to-1. And as you can see, the market really does move quite a bit further. Now, we have another opportunity. We have this market move up. In here, the signal line drops below. So we get another long trade. This is another signal to go long. Entry, stop loss, 1-to-1. Nice. That one was a winner. And as the trade progresses, we get yet another opportunity to go long. Price drops below the ribbon. We have the signal line dropping below the zero line. And then we have the price moving back above the ribbon. As the signal line moves back above the zero line, we have another opportunity to go long. So we have an entry. Our stop loss, sorry about that. Our stop loss goes below the swing low. Because the flatness of this ribbon, I don't like how flat it is right there. So I'm going to use this swing low. And then, of course, 1-to-1. And this one goes more, it goes 2-to-1. Almost every trade we look at goes 2-to-1. But I'm very conservative these days. I like the 1-to-1s because they're very easy to get and you're going to get them much more frequently. But 2-to-1 is awesome. All right, and then what happens is we get a short signal. We get the histogram turns red and the price is closing below the ribbon. Now, that ribbon signal is what I consider a late signal. And that's okay. You can take a late signal. There's a couple of things you can do. This would be the ideal signal right here, but it's not always going to work that way. No, the market is going to move and this histogram has to kind of filter it out. And we can see how it's filtered it out several times with great success. And it appears that this could also be the same sort of maneuver that had happened before. So it's trying to filter that out. And once it realizes that it's not a fake out anymore, it is going to really initiate the trade. So it does change directions and we get this later signal, but that's okay. I don't mind the late signal as long as the price hasn't really taken off. Don't have this big, massive candle that has left us behind. That's not the case here. And most of the time it won't be the case. So I have my entry to go short. My stop goes above the ribbon. And then I'm looking for 1-to-1. And then again, if I go 2-to-1, this would be about 2-to-1. So we get a nice, easy 2-to-1 out of this one as well. All right, so we have a couple more opportunities to go short. Price moves down, 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 and then it pulls up. Sort of gets into the ribbon. We get a couple of wicks into the ribbon. But what happens is the signal line moves above the zero line and then back below again. So if I mark that off, this gray candle right here is a signal to go short. So we'll place our entry, stop loss goes above the ribbon, and we look for 1-to-1. Now, because this is a short trade, we may not be taken out on this one right on the line. This 1-to-1 may not actually take us out of the trade, but we do have some momentum here. And like we noticed, a lot of these trades, a lot of the market movements go for 2-to-1 or more. So we get this move back into the ribbon and then it continues to move back down. It gives us an additional signal. Now we could take, if we missed this one, we could have taken this one here. Price moves back into the ribbon. Doesn't get any higher than the previous high, so our stop loss is safe. But the signal line moves above the zero line. And we get this signal to go short as it moves back down. So close of that candle gives us the signal. Stop loss goes above the ribbon. And then we're looking for 1 to 1. Now if I go for 2 to 1, I think that's right about there. So that one would also yield 2 to 1. So these trades are almost all yielding 1 to 1, 2 to 1, 3 to 1 in some cases. All right, so in this area here, we're looking for a short trade in this area. We get the price pulls up into the ribbon. Doesn't even have to get right to the ribbon, but we have this pullback, and we know that that pullback could be of some value because what's happening is the signal line is above the zero line while the histogram is still below. But we never do get a signal to go short. Even though we get this close below the ribbon, we don't get a signal to go short here. So that never happens. So we don't take that losing trade that would have caused us some distress to our account. Now, not every trade is going to be a winner, of course, but with this system, you're going to find most trades are going to do very well. I love the filtering mechanism that we have in here. Price moves below the ribbon, but the histogram stays above. Price moves below, histogram stays above. Here's one instance that potentially could be a losing trade. And we're going to get them. It's going to happen. Like, we can't avoid them 100%. But as you can see with the system, though, we are going to get them very rarely. They're not going to be all the time. So now you understand the histogram trade, the ribbon trade. When the histogram changes color, you get a signal to go long. When the histogram changes to red, the long signal, of course, is blue. When the histogram changes to red, you get a signal to go short. And also, we have trend following trades where the histogram remains a color, but we have the signal line dropping below and then back above, below, back above, below, back above. Here we had trade number 1, and the timing of this is fantastic. Trade number 1 is on this little candle just before it explodes. The market took off, and in one candle gave us everything that we wanted. We could have gone for 2 to 1, and on that one candle, we got it. A lot of systems will signal it a little bit late, and the signal will be on that bigger candle. This one gets us in at the perfect time. And then we have, another opportunity right here. Perfect trade, gets into the ribbon or close to it. Again, it doesn't have to get in or close or below. We just need for the signal line to drop below the zero line and then move back above. Beautiful trade. That one looks like a 2 to 1 as well, or potentially anyways. And then we get another opportunity right here. Close above, signal line pops above, 3 winning trades. And while this would be 4 winning trades, as we have the indicator changes color, goes from red to blue. Long trade, win number 1. Long trade, win number 2. Long trade, win number 3. Long trade, win number 4. And then we've got our trades to the downside. We've got short trade, win number 1. If we had taken both of these, short, win trade number 2. Short win trade number 3. Now, number 2 and number 3, they would have taken us out pretty much at the same time, but we got a couple signals and they both worked out really well. So this is such a nice, elegant trading system. The indicator is a little choppy, but that's by design, and it's doing exactly what it needs to do. And if you understand how to read the indicator, then you're going to make some really nice trades. This is the Forex Profit Ribbon. Thank you for watching. I hope you get some use out of this. I really want you to take advantage of this. This is a great, great trading system. Test it for yourself. See what you think. I do not think you're going to be disappointed. And of course, the price is right for this one. So because You got this as a bonus. Please don't take it for granted. This really is a powerful trading system, and you're going to get a lot out of this. This is a wonderful system. Please use it. And I hope I get to see some of your results with this. You guys take care, and thank you so much for watching the Forex Profit Ribbon. Again, my name is Russ Horn, and I hope I get to see you soon.